Is Nike stock a no-brainer buy after the recent stock crash? On Friday, the stock crashed close to 20%. Now it has a market cap of $113.76 billion, and as you can see, in the last 3 years, stock is down close to 50%. Now the question now is it cheap enough? Because let's be honest, Nike is one of the most known brands around the world. I don't think that 10 years from now there will be no Nike anymore. But now the question is it cheap enough to buy? Can it go down further? What will the business do? That's what we're going to discuss in this video, of course. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we'd really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, going straight into what the analysts are expecting for fiscal 2024, 25, 26, pretty clear, right? Fiscal 2024, basically no sales growth. EPS growing 15%. Margins went up as well, as you will see in just a second. But in fiscal year 2025, that's the problem. Restructuring, transition year, so sales decreasing by 4.7%, EPS decreasing by 7.3%, followed by a reacceleration in growth in fiscal year 2026, 6.44% sales growth and 10.24% EPS growth. Now currently the average analyst price target is at $96.76. You can clearly see before the earnings the average price target was at $109, but right now with the huge drop it still represents close to 30% upside from the price we're at today. And now, if we look at forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth, it is true that the stock is cheaper than its 5-year mean, but that does not automatically make it a cheap stock. It could very well be that before this stock was just expensive, yes, the company was growing, margin expansion, stuff like that, all fine, and so you got a premium. But right now, forward PE, 23.5 times. For a company that is expected to have a decrease in sales and EPS in the next fiscal years, I mean, that's not great. Plus, if you look at price earnings to growth, 2.77, not cheap either. So it's true that the stock is down 50% in the last 3 years, but it's also true that the business has deteriorated quite fast more recently. And so you're not having that huge disconnect that we've seen with other stocks. So yes, it is cheaper right now, but it might not be as cheap as you would expect it to be. Now, of course, meanwhile, the company is buying back shares. It is also paying a little dividend. Now the dividend yield sits closer to 2%. So it's true that in the meantime, you're getting some value. But of course, when the stock is down 30% year to date, down 20% in just one day, the value might take a while to actually be projected in your portfolio. And so let's talk about what happened during that quarter. Let me share my thoughts and let me share what the analysts are saying as well. Because again, there is lots of competition, especially now in footwear, right? Running shoes, whether it's Hoka, whether it's On, plenty of competition, and even in the lifestyle side, right? There's Lululemon. Lots of competition is not an issue. It's true that Nike has been here for a long, long time, so we know that there are ups and downs, and that they survive. Will the other up-and-coming brands survive for so long? Remains to be seen. They definitely have a lot of momentum with them, but with regards to Nike, yes, they know that right now it's not the greatest spot to be. They know that they have to change quite a lot. They're launching new shoes. Of course, there's also the Summer Olympics. It's usually a great event for them to basically deploy millions, if not $1 billion for campaigns, showing new products, running shoes, athletes that are winning gold medals, wearing Nike products. It's always, of course, a great win for them. But it takes time. This is not something that, oh, I have a good idea for a new shoe, and then 3 weeks from now, you've got that shoe in a store and customers can buy it. No, the whole process is taking a long, long time, and that's basically the big issue here, that despite them recognizing that the company is, let's say, struggling right now, the turnaround will take a while. I'm not saying you have to wait until the point of the turnaround, because the markets are always forward-looking, so the markets are willing to give a certain stock a premium if they already see some indication or a direction of, let's say, improvement. That will be the case, in my opinion, with Nike. Now, enough of me rambling. Let's jump into the report. So let's start with a couple of comments. We are taking our near-term challenges head on, while making continued progress in the areas that matter most to Nike's future, serving the athlete through performance innovation, moving at the pace of the consumer, and growing the complete marketplace. I'm confident that our teams are lining up our competitive advantages to create greater impact for our business. As for the CFO, we are driving better balance across our portfolio. While we are encouraged by our progress, our fourth quarter results highlight the challenges that have led us to update our fiscal 2025 outlook. We are taking actions to reposition Nike to be more competitive and to drive sustainable, profitable long-term growth. They now expect fiscal 2025 reported revenue to be down mid-single digits, with the first half down high single digits. As for the first quarter, they expect revenue to be down approximately 10%. This reflects more aggressive actions in managing our classic footwear franchises, continuing challenges on Nike Digital, muted wholesale order books with newness not yet at scale, a softer outlook in Greater China, and a number of quarter-specific timing factors. With regards to gross margin, they expect full-year expansion of approximately 10 basis points to 30 basis points on a reported basis. Moving on to the actual quarter. So revenue came in at $51.4 billion compared to $51.2 billion the prior year, so up 1%. Revenue for Nike brand were $49.3 billion, also up 1%. Nike direct revenues were $21.5 billion, up 1%, led by Nike-owned stores growth of 6%, partially offset by a decline in Nike brand digital of 3%. Wholesale revenue were $27.8 billion, up 1%. Revenues for Converse were $2.1 billion, down 14% on a reported basis and down 15% on a currency-neutral basis, primarily due to declines in North America and Western Europe. Gross margin increased 110 basis points to 44.6%, primarily due to strategic pricing actions and lower ocean freight rates and logistics costs, partially offset by higher product input costs, lower margin in Nike Direct, and unfavorable changes in net foreign currency exchange rates. Inventory also decreased year over year. Now, as for a couple of comments from analysts. So we start off with JP Morgan. They downgraded Nike to a neutral rating after having the stock set at overweight. We see an elongated timeline for Nike to reaccelerate revenue growth in the midst of a franchise product lifecycle transition with the global macro backdrop, notably headwinds in Greater China and Europe, Middle East, Asia, further complicating the path forward. As for Stifel, they downgraded Nike to a hold rating from buy and lowered its price target to $88 from $117. Management credibility is severely challenged, and the potential for C-level regime change adds further uncertainty. We remain appreciative of Nike's scale advantage in a category with secular growth tailwinds and structural margin potential, but at the current valuation can't support a compelling upside case until growth inflection becomes more tangible. Of course, the price target is higher than the price we're at today. As for Morgan Stanley, they cut Nike to an equal weight rating from overweight after pointing to the disappointing print and reduced outlook. While undergoing strategic change and recent performance has been riddled with quarterly misses and guidance cuts, we think this P&L volatility persists near term, and Nike's long-term growth and profitability trajectory is substantially both unclear and lower than our prior assumptions. Last one here from UBS, they moved to a hold rating on the athletic apparel stock. Nike's 4Q report indicated its fundamental trends are much worse than we realized. Our key conclusion is there will be no quick rebound for Nike's earnings. So I think it's safe to say that those analysts are not very bullish on Nike, especially not in the short term. Some of them still have a price target that is higher than the stock right now. But I think everybody knows that in the short term, this is basically, like we've talked about last week, this is basically dead money. Now, from a charts perspective, we are now back at levels not seen since, well, the crash of March 2020, the pandemic basically. RSI is extremely close to being oversold on the weekly. So probably if we see more weakness in the stock, it's going to be oversold next week. On the daily, of course, we are already quite oversold. Of course, a huge gap here. And again, we go all the way back to that level back in March of 2020, where we also had a small gap up that, by the way, never got filled. So overall, that's about it. Expect more short-term pain for Nike. The stock will always recover before the actual company shows huge strength, huge recovery. That's usually how the stock market reacts. There will be a bad quarter or okay quarter-ish, but if some comments during the call are more positive, more rosy than expected, then it doesn't matter that the quarter was an okay quarter. The market will be happy just by the commentary. So yes, you might get the stock at $70, maybe $65. Remains to be seen where it will rebound. That bottom in 2020 is around that area. If you are a dividend investor, then yes, maybe this might be a dividend plus a future growth potential type of stock. Could very well be. Overall, Nike is still one of the strongest brands on the planet. I do think that they will recover. The question is, how long will it take? That's about it for this video. Leave your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.